Hi, welcome to the Market Alert for Thursday, the 5th of May 2022. So this is what sparked today's euphoric post-Fed melt-up. Positioning and excess pessimism reflect a big part of the market reaction. What do we mean by this? Well, it was one statement, and that's all that was required to send the Dow up 900 points, and the dollar down, and the metals up. And all it was that Powell said that he couldn't see a reason to increase by 0.75%, and that's all the stock market was wanting to hear, so that they could move stocks to the upside, and also opens the door down the line that there's a chance that they could actually reduce rates, which is absolute madness. So now you have a situation where we've got rates being increased by a paltry 0.5%. We've got inflation sitting at 8.9%. That's the official rate. We know that it's closer to 17%. And they're trying to put out the fire with a teacup. It's as simple as that. It's like having a house fire and then throwing water on it with a teacup. And to actually state that they couldn't ever see a situation where they would raise by 0.75%, then that just ignites the stock market. But also, just think about this, that you've got a situation now where inflation, already rampant, is just going to continue to run away with it, and there's absolutely nothing they can do. But for the stock market in the short term, this is absolutely wonderful news, because it means that people are going to keep their money in the markets and not take it out and put it back into the banks where they're guaranteed a certain level of interest. Not that it's any good anyway, but then I suppose it's better off in the bank if the market's only making 1% a year anyway. But wow, this was a turn up for the books. That post-Fed announcement that Powell made is absolutely staggering. I've never heard anything like it, that they would actually be that honest at this point in the start of a tightening phase and increasing rates. Talking of tightening, this starts in June. They always put it way down the line, so just in case something happens, they don't have to do it as well. So again, stocks saw the best Fed hike day performance in 44 years. That's how incredible this was. Inflation is much too high, but apparently stocks aren't, and that says it all, doesn't it? You've got to bring the stock market back up. Like I say, I'm speechless really in why he would say that, unless he was trying to support the stock market and increase rates. But it's going to backfire. It's going to backfire. As it says here, fate loves irony. The things rarely end up how we expect, and that was certainly the case for yesterday. So rates went up a 0.5% yesterday, and today is the turn of the Bank of England. We're looking at 0.25%, and again in the UK we know that inflation is running way above the government's official figure of whatever it is. I can't even remember. It's at dire. Is it 6% or something? It doesn't really matter. We'll find out next week. It's CPI week next week. But whatever it is, we know from the supermarkets and the news headline that was put out yesterday by the government, the cost of living is rising exponentially every week. And again, we've got this situation where they're going to try and actually stem inflation by 0.25%. Incredible, isn't it? But then I suppose we do have a supply side inflation, not a demand driven one. But then of course, if the supply reduces, then the demand increases of people wanting food. I mean, there's no end to the situation of food shortages coming along and rationing coming back, which has already happened. If you look at Neil McCoy Ward's videos on YouTube, have a look at the one he posted a couple of days about how he was rationed in the supermarket for certain goods in the Isle of Man. So it is coming. But at the moment, it's like, one last hurrah of getting everything to the upside. But yeah, what a day. What a day. Gold-silver ratio, you can see this came down last night as silver took off, which was good to see, I must admit. And again, this is the situation, isn't it? There's no reason why the gold and silver markets now can't actually move higher, because Powell has said, what we're going to do is just throw a teacup of water at this, see what happens. Well, the inflation hedge and bet is gold and silver, and therefore that's why you saw it move strongly last night. And again, we'll look at that in just a moment. But let's start off with the Dow's reaction to yesterday. And here you can see a massive move yesterday to the upside following the news. You've got to see this in the 30-minute chart really to see how explosive the move was. Market was oversold obviously because it moved down. We've gone through the DP, but we've got a divergence and a crossover and some volume. It was like this all afternoon, and then whack up we came, and that was the news out, so the market was happy with that. But then after that statement by Powell saying he could never see an increase of 75 basis points, just look at the move. It went up for the next hour and a half, and it stayed that way, and now we're heading for yesterday's high, which we can see there, and that's no doubt it's going to be taken out. Now how far this goes, who knows? Have to go back to the daily chart to see this. You can see that we've got major resistance at this area. If we break this, we've got the 50 bar moving average, and then we would have to draw in these averages here. So there's your 62%. So 34,335 is the first upside target for the Dow should it break this high to the left and yesterday's high. We've got a double top resistance there at the moment. In the German DAX, again we saw this moving to the upside yesterday through the 62% retracement, and now we've got 78 here, 89, and then back up to the 14,500, where again we have a double top there, but we've got to get through the 50 MA. I suspect that we'll blast through this at 7 a.m. How far the market goes before the reality really kicks in that what Powell has done is not that smart, and is going to cause all sorts of problems, i.e. job losses, corporate reduction in profits, etc., and also accelerate the recession, bring it forward. Normally it's 18 months after the yield curve inverts, but I think you're going to see this come in a lot quicker after yesterday's actions by Powell. So the 30-minute chart, again, yesterday the market traded sideways. We can expect that before something such as a major announcement that we got. The market up, back to the DP, back to the 200, and again that 30 minutes after Powell had made his statement, the market just moving strongly to the upside. Not as much as the Dow, but nonetheless still a significant move there. We just have a look up to the close. The market up 282, 300 points in this move. So another big move for the DAX. Like I say, will it hold? Who knows? Who knows? We'll just have to use the daily chart to have a look at this. And like I say, you've got your targets here, your 50 there as well, which the market's at the moment. So yeah, a very interesting day. Let's just have a look in some detail of what happened at 7 p.m. You can see how wild it was just even for the DAX, which doesn't have the same level of volatility as does the Dow. Back to the DP. Again, you see the buying there, and then the market just continuing on up all the way throughout the remainder of the Dow's trading session. And overnight, the market is already through yesterday's high. We may see a retest of this first before heading back to the upside. But they're going to try that for the second day, I would have thought, unless they brought the market back to sell into it. Like I say, we're going to have to watch the price action. That's going to dictate what's happening. But it's interesting to see quite a large cluster of volume here already at the 14,300. See what the Dow and the DAX do at the European Open at 7 a.m. In the currencies, incredible. The reaction wasn't that big. Let's go to the 30-minute of the GBP. I suppose I'll say not so big, but again, we can see that there's probably, I don't know, let me just measure this one out. It's a bit hard to calculate that. Let's just see if we can get a number. Yeah, it is 100 points. It looked like 100 points, but when it's either side of in between two bars there. So it's 108 point move there on the yen on the first 30-minute bar. Then a reversal of just over 100 points as well, and then moving higher. But overnight, bit of weakness there. But in the daily chart, we still remain in this sideways move, and that's going to be down now to what the US dollar is going to do, which we'll look at in just a moment. And in the pound, well, that's going to be waiting for today's UK Bank of England announcement at midday. We're a quarter of a point, and that should be bullish for the currency, unless he makes a dumb statement like Powell did yesterday. So there you go. You can see the pound moving sharply higher as the dollar fell yesterday, and at the moment finding a bit of support around by the DP, and also the 200 MA is there as support. But more importantly, the market is currently trading at 125. Let me just get rid of this so I can see this a bit better. We're trading at the 125.50, aren't we? Yeah, area there, yeah. And finally, let's have a quick look at the metals. And in the silver market, you can see prices moving up sharply from the announcement. Let's have a look at this in the 30-minute chart. And there you can see prices exploding to the upside. And like I say, it's because the market realizes that they're not actually going to try and put out the fire. So this is good for the metals markets, as long as, of course, JP Morgan and co see fit to otherwise to try and smash it, or Powell comes out and says, actually, I've changed my mind. We could actually use a 75 basis point increase, and then, of course, that will change things completely. But yesterday he was... he was saying that wasn't going to be the case, but it'll be interesting to see how he changes his mind, because he's been known to do so with such statements. The market currently finding support at yesterday's high, and just going back to the daily chart, you can see that we're currently sitting at the 78% retracement for this. We'll have to see what happens at the LBMA 1 p.m. fix for the price of silver, but at the moment the market making its way back at this time. It'll be good to see if it can actually get back up to these sorts of levels, back up to the 27, so a good ride up to this point. And gold also bouncing nicely yesterday as well. You can also see that this is up to at the 78% retracement. That needs to be taken out, as well as the 5, the high to the left here, and the 20 bar moving average. Meanwhile, the dollar tanked yesterday, as this also saw the opportunity of going short, because again, Powell saying that he couldn't see that any reason to increase the rates at anything above 0.5%. Oil to the upside. Yesterday I reported about the shortage, or the coming shortage of diesel, the impact this will have on transportation, on farmers for tractors, and also if you think you're going to get your food delivered by one of these diesel vans, think again. The knock-on effect of a shortage of diesel will be catastrophic as we go into the summer, where this is already started. It's already been seen on the east coast of America. So once it hits the UK, that's something else you're going to have to take into account. We're going to see crude oil can, move back to the upside on this news, despite the fact that it's a refinery issue. It's like it's engineered. Unbelievable. And there you go. That's the roundup of yesterday's clown world. It's the only way to describe it. Let's see what happens today as the markets open in about 5-10 minutes from now. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.